Creamer Media's Mining Weekly Online is talking to Hugh Daniel, the Chief Executive Officer of Platinum Guild International, which promotes platinum jewellery.
PGI, my organisation, basically works in the four major jewellery markets of China, Japan, the US and India. So if we look at those markets, in China, which is our largest market, demand has been declining for the last 4 years, mainly because of changing consumer tastes, but also the limitations of our marketing reach. But when we look at the areas that we're actually promoting heavily, we actually see strong growth. So that's in areas like gem set and bridal. Then if we go to the other markets, Japan is growing fourth consecutive year, around about 2 to 3%, which is significant in a mature market. Likewise, the US has been growing for about 4 years now, a healthy rate in a mature market. And the most spectacular growth, of course, is being delivered by India, which has been growing at about 25 to 30% for the last 5 to 6 years, and is online to basically be delivering about 500,000 ounces of demand in the next 2 to 3 years. So it's quite an interesting mix, as you'd expect, because they're quite different geographies. But I think that the health of the Platinum brand, if we look at the brand health in terms of the awareness levels and desire and purchase intention, remains very strong in the four major geographies.
And Platinum Guild International, it's been going for quite a long time. And how is it funded? And do you have adequate funds at the moment to really promote jewellery in platinum the way it should be done for the good of South African mines?
Well, I think that, yes, you're right. The business has been here for a while, about 45 years now, and it has a strong track record. Since 2001, jewellery has delivered something like 35 million ounces of demand. That's all created demand, of course, because the jewellery market, we're competing against other things that consumers can buy. So it's a marketing-driven model. When we look at the funding of the PGI, it has declined in recent years as the industry's been under financial stress, as you'd expect. It's a credit, actually, to the industry that they've remained committed to the model. But yes, the funding is obviously, lower than we'd like to see. And importantly, I think we need to focus on what is the opportunity to create more demand. There's a lot of white space out there for platinum jewellery, and that's, I think, a message that the industry needs to keep focused on.
And that white space, where is it?
The most immediate place in that is China. China is a very interesting market. It's a hybrid of a developed market and a developing market. So if we look at the city tiers, which is the way, from a business point of view, we look at the market, the tier 1 and tier 2 cities are the more bigger cities, the big centres like Shanghai, Beijing, but also the major provincial capitals. The economy in those cities is kind of stabilised and growing at a much slower rate, where the real white spaces in the tier 3 and 4 cities, they're the smaller cities, still substantial size, but there's over 250 of those just in tier 3 alone. That becomes really a numbers game, because obviously from a marketing point of view, you need to be in as many cities as you can be. And that's just determined by the budget that you have. More budget you have, the more cities you can be in, creating that next generation of demand.
And so there's no point in us really digging up more platinum from our wonderful endowment unless we can have these outlets. And jewelry is the second biggest outlet, so after auto-catalytic converters, I presume. If money were no object, would you see a lot more opening up in the world, or do you think it's largely covered?
Yeah, there's huge potential. If we look at China alone, the way we've analysed the market, just in what we call love-related jewellery products. So that's jewellery that is bought as an expression, as a gift of love. At the moment, if you look at the China business, it's roughly about 1.5 million ounces net demand each year. we reckon that there's at least another 3.5 million ounces that could be generated through marketing into those new markets. Because what you have in China is a rapid urbanization, a whole new generation of middle-class consumers coming on stream. If we can be there to meet them with a platinum jewelry product, then the opportunity is enormous. So that's kind of the lowest hanging fruit, and that's in China. Then if we go across to India, we have a very successful program there that's growing very fast. And again, that is huge potential. We're in about 900 jewelry stores in India at the moment. The potential there is probably at least 2,000 to 3,000 more stores. So that's a positive story. Even in the mature markets, we have a very interesting program in the US at the moment, where if you look at the engagement ring market in the US, it's predominantly a white gold market. About 75% of engagement rings that are purchased are gold. What we find is that if we could just convert the heads that hold the diamonds on those rings into platinum, so you don't have to buy the whole ring in platinum, just the heads, there's another incremental 150,000 ounces. So there are these pockets of opportunities everywhere.
It would almost pay South African Incorporated to actually fund this, because it would be an opportunity, I'm sure, for businesses other than the miners. Is there an opportunity to expand that funding base?
I would hope so, because I think if you stand back and look at what we have, South Africa has this amazing asset in what I'd call brand platinum. High consumer awareness, very clear, strong emotional attributes. It's very clearly defined brand in the hearts and minds of consumers around the world. If we could market more to that product, we could generate significant incremental ounces. For the mining industry here, that would obviously help add tension to the price. And at the end of the day, a lot of people's livelihoods are dependent upon the health of the platinum business. So I think it's a really interesting opportunity for South Africa to step back and look at what do we have in this brand platinum, and what is the upside in investing more into it.
And there's some unique selling propositions for platinum. Its density is one of them. Can you tell us about that?
Yeah, I mean, it's interesting because a lot of luxury good marketing is just based on image. The fantastic thing about platinum is actually you've got really an incredible story to tell. So its density means that it's the securest setting for a diamond. It's highly tensile, which means it can be used in different kinds of jewelries that no other metal can be used in. It also has great wearability. It loses less metal in daily wear than any other precious metal. So from a product performance point of view, it is by far the superior precious metal for use in jewelry.
And is that being recognized by manufacturers? How many manufacturers do you have, and how many outlets in total in number?
Well, the PGI works with a relatively small slither of the jewelry industry because, let's face it, platinum from an ounce perspective is still a relatively small player in total jewelry market. But through the PGI, we work with about 70 manufacturers across the 4 markets and about 1,600 jewelry companies, which represents in total about 12,000 jewelry points of sale. So that, if you think about it, is an incredible network that any multinational marketing company would be proud of. And I think we tend to look at the jewelry industry as our foot soldiers. These are the guys out there who are helping us get that message, get that product into the hands of the consumer. So that's, again, part of that brand platinum. That is an asset that South Africa has that can be activated.
That was Hugh Daniel, the CEO of Platinum Guild International.